With the rise of AI and machine learning, many people are questioning whether roles within finance will be automated. If that's the case, what does that mean for the CFA, especially given the hundreds of hours required to complete it? Is it still worth it? Let's find out. In this video, I'll break down what AI is already doing in finance, what roles are most at risk, and how the CFA has to evolve if it wants to stay relevant. If you're new here, I'm Harris, an investment banker and CFA charter holder who studied at Imperial College London. So let's start with what AI is doing in finance. And the truth is, it's not coming, it's already here. First up, we have robo-advisors. Now, these have been around for a while, and they essentially provide wealth management without the human touch. And these are particularly effective for the mass affluent segment. So these are people between $100,000 and $1 million in assets, or those that earn between $100,000 and $250,000 per annum. For this segment, low-cost passive investing is usually best, so robo-advisors can suggest an off-the-shelf solution. And this spans a variety of diversified ETF portfolios across different asset classes, which are selected depending on the investor's needs. And the appropriate portfolio will be determined by a set of rules or an algorithm. Robo-advisors such as Betterment and Wealthfront are already managing billions using these strategies. However, as you step up towards the high net worth and ultra high net worth and ultimately the institutional investor bracket, that's where an element of human touch is required. And that's typically because these investors have more bespoke requirements. The next example is algorithmic trading, which is essentially what quant funds are doing. And this involves automated execution of trades using predefined rules based on price, volume, timing, or other market signals. Now, if these rules are fixed, there's no learning involved, so this isn't necessarily AI. But if the model learns from the data, this is an example of machine learning, which is a subset of AI. An example of this is natural language processing, or NLP, which analyzes data such as earnings calls and analyst reports and extracts data much quicker than any human can and then incorporates this into decision making. The third example of what AI is already doing in finance is credit and underwriting analysis. Banks and fintechs use AI to analyze risk in seconds and help them make lending decisions. This is typically focused on the retail segment, i.e. you and I, as opposed to professional and institutional investors. The model assesses borrower risk by analyzing things such as credit scores, income, debt, transactions, social media, and a whole host of other factors at lightning speed. Fourth example is efficiency. Banks and other financial institutions are using large language models such as Microsoft's Copilot or ChatGPT or equivalent to help drive faster workflows. This can include summarizing info, doing market research, drafting emails to clients, and drafting internal reports. Now, these are just some examples. There are many other use cases, but let's now move on to what roles are most at risk. Truth is, not all roles will survive the AI wave. As a general rule of thumb, anything that is administrative, rules-based, and generally automatable is most at risk. For example, junior equity research roles mainly involves gathering data and producing simple models and reports, and large language models can already do this quite well and will only get better. Now, of course, someone has to confirm the accuracy of these models and reports, but that only requires one or two people as opposed to a full team, so you'll probably see fewer of these roles moving forward. Another example is retail banking staff and retail credit analysts. You've already seen a significant reduction in bank tellers, and as digital banking and chatbots get better, customer service will almost entirely be automated. Similarly, in terms of lending decisions, I already mentioned that banks and fintechs are using sophisticated models to analyze credit risk, so the likelihood of needing retail credit analysts is diminishing. And finally, many middle and back office roles, especially those centered on reconciliation and reporting, are at risk. It goes without saying that the majority of these roles involves processing and checking large amounts of data, which will be automated. So what roles are least at risk, at least for now? Well, client-facing advisors and relationship managers are likely protected, at least for now. And the reason is financial products are largely commodities now. You can get a loan from pretty much anywhere, or you can get pretty much anyone to manage your money. So really it boils down to who you like the most, which means relationships matter. Now, although the relationship angle may protect these roles for now, as I said, if these products are commoditized, you may arrive at a situation where the decision makers don't want these decisions to be made based on who you like the most, but ultimately what drives the most value. And if you can crunch what drives the value into a model and make a decision, e.g. based on price, do you even need the middleman, i.e. the relationship manager or the advisor? Maybe we just hand it over to AI models to make these decisions. Who knows? The next one is investment banking, specifically M&A, capital markets, and investment strategy. This requires deep industry knowledge, strategic thinking, negotiation, and relationships. So you'd expect that these will not be replaced, at least for now. Again, though, the products that are being provided, particularly within capital markets, are somewhat commoditized, i.e. you can raise loans and bonds and private credit and so on and so forth, debt essentially, across multiple different instruments. So ultimately, do you need banks in the middle to help you facilitate this, or can models eventually, or AI, eventually help drive this. It's a possibility, however, I think it's very, very intricate and there are other variables in play which are sometimes difficult to crunch down into a model. So I think at least for now, these will remain in play. And finally, any role that involves interpreting AI and converting that into an output. This is more of a general point. There is an emerging field where people are being hired for their AI aptitude. If you can help train models and improve workflows and so on, and essentially leverage AI to improve the company's performance and efficiency, you are useful. The overarching point is that AI may be able to crunch numbers, but it can't build relationships, build trust, navigate politics, and the other gray areas of life. So roles that lean into these areas are likely protected, at least for now. Next up, we'll discuss what this means for the CFA. But if you're already studying for the CFA Charter, you should know that if you want to conquer the exams, you need to master the calculator. But many people don't know where to start, so I've created a free guide with everything you need. The link is in the description. So what does the emergence of AI mean for the CFA Charter? Is it dead? No. But is it evolving? Absolutely. Now, the CFA's primary objective is upskilling you on fundamental investing, so understanding asset classes, markets, risk, and return. And much of the CFA curriculum, such as discounted cash flow analysis, accounting, bond maths, can be automated to some extent, but here's the nuance. You have to understand what's going on. You can't just blindly follow what a model tells you to do. You have to understand the parameters, the logic, and the implications of a decision, because finance is multivariate, decisions have first, second, third order effects, and you can't just look at things in a binary way, which is often what models do. You have to be able to take what the model suggests and then zoom out and consider all the implications, and for that, you actually need to understand the landscape, which is what the CFA equips you for. Beyond this, investors seek competence and trust. Investors want to see that somebody has franked the model outputs, considered the impact, and suggested the most appropriate solution. So they want to see rigor, and more importantly, they want to hold someone liable if something goes wrong. And clients will pay for this comfort blanket, and you're seeing this play out in law. Magic Circle law firms already have sophisticated models which are helping them with drafting. So in theory, you might ask, why do we even need lawyers? Well, companies will pay for that comfort blanket of knowing that a real human has reviewed those docs, has ensured that it's watertight, and if something goes wrong, they can hold them liable. If you simply outsource it to some AI model somewhere, who's liable if things go wrong? We can't yet have machines running a world where investors have millions, if not billions of dollars at stake. We might get there someday, but these larger organizations move slowly. It's not just about having the infrastructure to facilitate it, it's about changing everyone's mindset and attitude towards AI. So looping that back around to the CFA, investors want to see that people who are managing their money or helping transact with their money are super competent, rigorous, have been trained in all the fundamentals. They don't just want to outsource it to some model. And the value of the CFA extends beyond just learning about finance. The confidence, discipline, resilience, and ability to learn that you develop through doing the CFA Charter are skills that no one can take away from you regardless of what the landscape looks like. You will always have credibility because of it, and you'll always be able to adapt and learn new skills because of it. And all of this aside, the CFA Institute is already adapting. There are more data science focused modules, you now have the Python, PSMs or practical skills modules, and there's a push to make it more applicable with real world case studies. Ultimately, AI will not make the CFA obsolete, but it will raise the bar for what CFA charter holders need to be good at. If you decided to go for the CFA, you should know that more than 50% of students fail their exams because they don't have the right strategy, they're not efficient learners, and they don't have anyone to turn to for help. And in the process, they waste hundreds of hours and thousands of dollars on research. So if you want to avoid this and pass your exams first time without sacrificing your entire life, I have something perfect for you. Check out the first link in the description. So with all of this in mind, what should you do to help future-proof yourself? The first one is learn to use AI as a tool. And to be honest, this is a non-negotiable and arguably the most important one on this list. AI is here to stay, no point fearing it. You need to adapt and start incorporating it into your workflows. Get better at prompting and extracting what you need from AI, play with ChatGPT and other large language models, and if you have the option to in your workplace, start upskilling and using it to improve the workspace's workflows. The analysts on our left fin desk have not been replaced, they're still there and as important as ever, but those who have upskilled with AI are developing faster than their peers. And this is particularly important at large institutions, so financial institutions in particular are very slow moving, so those with a modern mindset and those who are upskilled with AI can help speed up workflows, and that makes them very valuable. The next one is sharpen up your human skills. So for example, judgment, storytelling, strategic thinking, negotiation, These things are not going to be replaced by AI, and if you can upskill on these fronts, again, you will remain valuable. The third one is stay curious and adaptable. We live in a world that moves at lightning speed now, so it's impossible to know everything. However, what you can do is remain adaptable and curious and be able to learn quickly, and this way you can ride the wave and remain relevant. Essentially, don't waste your time on brain rot and scrolling social media and so on and so forth. Commit some time in your schedule regularly to keep up with trends and learn new skills. And finally, if you do opt to do the CFA, combining that with AI will mean you are unstoppable. You can essentially use the CFA to build a structured foundation and then use AI to supercharge your productivity, and together, honestly, that's a real quality skill set. In my view, it's not a battle between humans and AI, it's a partnership, so if you can learn to work with it and integrate it into your workflows, you will remain relevant moving forward. So there you have it, my view on whether AI will kill the CFA or finance in general. If you like this video, you're going to love these two on screen, and otherwise, thanks for your time and see you in the next video.